Let's continue to lay down some of these key foundational concepts. Now, if you've got a good handle on it and you understand how to read a chart, those kind of things, and you just want to jump ahead to a certain section, feel free. That's okay. That's no problem at all. But let's talk about some more of the real key foundational things. And I like to think about that there's these different tools and things that you can use. And a lot of them are free out there too, are these platforms you can actually use for free. And through we demonstrate through the course, everything I'm using is something that you can do and replicate yourself for free, by the way. But if we think about it, you can almost think of like an artist, for example, like the chart of the canvas that they paint on. Well, that's a chart, right? That's where you're looking at the prices and some of the charts and things we saw. So that's the overall chart. And then how you interpret or read that chart is where you'd use tools. Just like an artist might, paint with a paintbrush to kind of, in fact, make it come alive. We use tools like that in technical analysis. Price bars, candlesticks, lines and trend lines, indicators like moving averages, volatility indicators, momentum indicators, all sorts of different types of things we're going to learn about in the course. But think of it that way of like, I've got my canvas and then I'm going to apply my tools and that's going to help me decide, what to do. So let's start by looking at the chart and understanding what a chart is. Think of it as that blank canvas and you pull up a security and then it fills in your chart and now you can start interpreting. But you have to be able to read a chart too. So let's walk through, how to read a chart. Again, if you're familiar with how to read a chart, skip ahead. But I think it's a good foundational exercise. So let's look at a chart here. This happens to be for a company called Xcel Energy. But it could be a chart for Bitcoin or anything. It could be any kind of chart, but I happen to use this one for demonstration purposes. Now, first you might look at this and say, ah, you might scream and say, that's a lot of information. I have no idea what's going on. Seems pretty complex to me. Don't worry about it. We're going to walk right through all the different components. And as we go through the course, I'm going to give you lots and lots of examples. And you'll say to yourself at the end of the course, boy, I am an expert at reading charts in so many different ways. So no worries, you'll be able to understand. So let's walk through the different parts of a chart here so you can kind of get a feel for how that works in the different parts. So first off, if you see at the top here, that's just the name of the symbol. Again, it could be a stock, it could be a currency, it could be Bitcoin, Ethereum, whatever. It's basically the name of the security that you're looking at. Usually it's in like a shortened form, but if you put in the full thing, the program will automatically pull up. If I put in Xcel Energy, it would automatically pull up and I wouldn't have to memorize the symbol, but it does that too. And then the period, this is looking at daily prices. So when you look down at the chart, it's going to be daily, and you can see there's a little bit about information about Xcel, what its open price was, what its high was, that kind of stuff. So that's the kind of basics to get it started on there. Then if you look down at the chart itself, I put some letters around as we walk through these different areas. So what you'll see on a chart is on the right-hand side, sometimes on the left, but typically on the right-hand side, you're going to see where the letter A there, you're going to see the price, right? So this represents a range of prices that this security has ranged over this period of time, and some highs and lows above that too as well. But you can look across, horizontally and look at a certain price point and see, well, how much, when was it trading at this price point? So that's the right-hand side, or the vertical axis would be the price. On the bottom, on the horizontal, and you can see the letter B there to the left, would be the time frame. And time would go from left to right. So farther back in time would be, like to the left, and more near time would be to the right. So I'm not sure how many days this was, but let's say it's, 50 days. 50 days back would be to the far left, and yesterday would be to the most recent far right there. So it gives you an idea of time as far as when they intersect, as far as time and price, what the security was trading for at that particular time. So as if you look at, let's say, letter C, you can see that's like around, it ranged somewhere around the $66, $67 mark there. You can see, we'll learn about candlesticks, but it represents the high price and low price of the day. But that individual bar there, that long kind of empty bar there with the white in it, that's a price bar. That would show you the price for the day. You can probably see to the right there where some of the bars are turning red. That just means that those prices are at those levels, but they were down. They were going down from their opening. They opened higher and then they closed lower. Don't worry, we're going to learn all about that. But the idea is each of those little individual bars represent price. And then if you look at, let's say, letter D, you can see this is basically representing the whole chart, but basically you can see from left to right how prices move up and down over this period, right? That's, think of the whole chart as a whole, looking at it from left to right, and you see all the kind of ups and downs, peaks and valleys. If you look at letter E, what that'll usually represent on the bottom there is volume. How much are people trading? How many active people are trading the stock, both buying and selling? And it tells you if some days they're trading more frequently than others. You look to the right, for example, of these little bars. You see where they're taller in some cases towards the right. That means there's more trading volume than on other days where the bars are shorter. As technical analysis go, that actually tells us things, that when there's a lot of volume, that means something's happening, and we'll talk about that as we go through the course. But that's something to note as far as with volume, and you'll see that on a chart. A lot of times on a chart, you'll see, like with the letter F, you'll see things that are overlaid over it. Typically, you would just see the price bar, the price peaks and valleys, but you can overlay things over the top of that to give you an idea of something. Like in this case, we've overlaid these lines that represent a 50-day moving average is the blue one, or kind of purplish, and the pink one, or reddish, is the 200-day moving average. Got a whole section on moving averages. It's a great indicator. But basically, you're looking at what's the price been, averaging over the last 50 days or the last 200 days. That's why the lines have different looks to them. And when a price bar crosses over, the line crosses over your individual prices, that can tell you something, whether to buy or sell. Or if the two bars or the two lines cross each other, that can tell you something too. For now, all you need to know is that there's things that you can overlay over your chart that you're going to learn all about that you can use to help as far as deciding whether to buy or sell. And then G is kind of like a where you can add things on the top or bottom of charts depending on your software or the platform you use. This one just happens to be an RSI, a relative strength indicator. Have a lesson on that, no worries. And it just tells you, gives you some additional level of indication whether you should buy or sell. If you look to the left there of that kind of that long plain line there, you might see where it peaks above the 70 number. And that's not the price, by the way. That's a different kind of representation that we'll learn about. But you can see where it peaks above that 70 number and it's kind of grayed in there. That's where it's telling us that this might be a time to sell. And if we look down, straight down from that, like that gray part, we can see it really, our prices started to really peak there, right kind of where the letter D is there, and then started to turn and go down, right? So if we look to use this relative strength indicator, we could kind of confirm or look and say, you know what? We've had a nice run up in prices all the way from the left to the right. Getting a little high now. This relative strength indicator, which is an indicator we can use that's based on math and technical analysis, is telling us, hey, we might want to watch this. We might even want to sell because we could be running out of steam and time to sell. And you can see how they kind of match up, together, and they actually went down. In fact, if you keep going down further, you see that little spike in volume there. That can be an indicator saying, a lot of people are thinking the same thing and maybe looking to, start thinking about getting out of this particular security. So this is where they can kind of all work together. So the idea of a chart, if it still seems a little confusing to you, no worries. When we go through the course, I'm going to show you charts. I'm going to show you things. I'm going to walk right through, and it'll become even more easy to understand as we go through. For kind of an extra credit or whatever, we can say, if you look at this example chart, what might it be telling you? And let's just concentrate on the right-hand side there, like where these big, long red bars are more towards the right there. What is it kind of telling you? Do you have a feel for what it might be telling you? What's happening with the price? Is it going down? Is it going up? Is it going up sharply? Is there a period where it might be going down sharply? And if you look closer to it, and as you learn to read about charts, and don't worry if you don't get it yet, no worries at all. But just look at it and say, okay, here, if I look at this period, boy, that really went down, right? It started, okay, pretty high, around 74, and then went real steeply down, those long red lines, and then kept going down, down, down. Look at all those red days in a row, a lot of volume in the bottom, so a lot of people were selling. Then it kind of, went sideways a little bit and then kept going down again, right? So you can kind of learn from that as far as what's going on we'll learn about trends and things, but we'll learn why is that happening, how can we anticipate it, and how can we, in effect, either avoid it or take advantage of it. If you look to the right of where I've kind of highlighted there, you can kind of see where it's kind of stayed in a narrow trading range, we would call, where it's not gone up a lot, not gone down a lot. It just keeps bouncing up and down. So the range looks to be around 64, let's say, dollars and $66.50. And the current price there on the right, that'll highlight in black when you look at a price chart, by the way. It'll say 66.02 is the current trading price. Now, do you buy? Do you sell? Do you do nothing? Well, that's what we'll learn about in the course. But if you think about it, just kind of, common sense wise, you could say, well, if I'm in this trading range of $64 to $66.50, and right now I'm at 66.02, there's not a lot of room to go up. In fact, there might be more downside risk than upside gain. So that might be one way you can certainly look at it as well. So reading charts or admiring the artist's canvas, and you're the artist, not a hard thing. And as we go through the course again, you'll learn it, you'll be comfortable with it, and you'll love it because you're going to be looking at charts all the time and making great decisions using those charts and the tools and indicators that we're going to learn throughout the course.